Right. Hello, folks. Welcome to this quarter's Tech Cost Management Tech Showcase. As you know, we do a Grow CFO Tech Showcase every quarter. This time, we're going back to a subject we looked at the beginning of last year, cost management, because a lot has changed in this area. So I've got four really interesting guests this afternoon who are each going to tell us what's going on in their part of the world. Johanna's going to talk to us about expense processing. Celine about the purchase to pay process, where I think AI agents are really making a difference now. Um, Ed is going to talk to us about that overall cost of AI and the cloud, which is now becoming a major thing in this area. And Shervin's going to come in and talk to us about the cost of SaaS. Because as we look at things, cost management is no longer just AP automation. We talked at the beginning of last year about how automation was transforming this area, but it's got a lot bigger than that. Technology really has moved on. So we're talking about AI to help us manage supplier spend. We're talking about AI to help us manage employee spend. SaaS is becoming an even bigger issue. How much SaaS spend have you got going on? It's very different to that normal supplier spend that you're going through possibly a business case process to justify that. The SaaS spend, you went through that business case spend and then you got yourself committed to a monthly payment and lots of licenses. Very difficult to control. And then cloud is becoming a bigger part of everybody's world, particularly AI. You know, the cost of AI could become phenomenal. It's very much pay for the tokens once you're working on serious AI apps. So now we've got a lot to get through this afternoon. So we're going to briefly introduce everybody in a moment. Um, then I'm going to go into the tech innovation report in a little bit more detail because we've looked at this subject in a fair bit of depth this quarter in Grow CFO. And I've just spotted the first mistake of the session because that should say the Q2 Tech Innovation Report. That served me right, just copying the slide from the previous presentation, Kevin. Okay, we're going to have a look at the solutions that are available today. Each of our four guests are going to give us 20 minutes, which would be 15 minutes demo and 5 minutes open for Q&A. And then going to ask everybody back at the end of the session to take a look into the future and say, well, we know what's happening today. What are we going to expect next? Okay, so that's today. So I'm going to briefly stop sharing screen and say hello to our guests. Johanna, welcome.
Hi, Kevin. Thank you so much for having me here. And hello to everyone. Just a bit of an introduction on myself. So I'm Johanna. I'm the customer success team manager here at Expensin. We essentially help organizations simplify and take control of their spend, replacing manual processes like spreadsheets with something more efficient and visible for finance teams. Expense management tends to be something that can be quite overlooked as part of the finance stack, but it really does have a big impact on efficiency, control, and visibility, which is why it fits really well in today's tech showcase.
Yeah, certainly in Grow CFO, we're seeing more and more spend coming through on credit cards.
Absolutely.
It's much bigger than it's ever been.
Mm,
We don't send very many people invoices anymore. It's nearly all handled through that expense system. Yeah.
absolutely.
But Celine, you're looking at that invoice processing side of things.
Thank you. Hi to everyone, and thank you for having me here today. So I am product evangelist at Use. So what I do is I do webinars on different subjects for either partners, clients, prospects. And so Use is a solution which enables all companies of all sizes to automate their P2P process. And so we have different technologies with lots of different services offering from A to Z opportunities to add all the services you need to process your AP automatically. And so
Yeah,
that is what I will show today.
brilliant. Looking forward to Celine. Ed,
Thanks very much, Kevin. Really appreciate it and great to see everyone. So I'm Ed Barrow, founder, CEO of Cloud Capital. We help finance leaders to get visibility, predictability, and efficiency out of their compute and AI costs. So if you're one of the many CFOs who's staring down the barrel of the gun at a rapidly growing Amazon Web Services, Google Cloud bill, or starting to see your Anthropic tokens skyrocket through the roof. Today, we're going to walk through how we can help you, first of all, forecast that. And so you get much better understanding of why you're spending what you're spending, how that's likely to grow as you scale your business and as you develop your products and services. And then we're going to walk through how we can actually drive really material savings, where we can underwrite long-term commitments to your consumption such that you benefit from huge discounts on your compute and AI spend without you having to take on the financial risk or the lock-in typically associated. So we're going to dive into that. And we're also going to spend a little bit of time talking through some of the research we did so that you can be assured you're in good company if you're starting to struggle with in some of these areas. So
Yeah.
looking forward to it.
I must admit that I'm thinking about AI at the moment in the way that maybe the cigarette vendors used to think about selling their product. Here you are, have a nice free packet of 20. Oh, now you're hooked. Keep spending the bill. And I can just see that happening all over the place right now. No, it's no longer £20 a month to ChatGPT to have a conversation. We're now starting to build apps that are using tokens, that are pulling in queries all over the place, and just keeping control over that is the problem we're going to be facing going forward. Definitely. Shervin, welcome.
Thank you so much, Kevin. And hi, everyone. And Kevin, you're absolutely right on the money, right? And I'll get to that in just a second. But who am I? Well, my name is Shervin. I'm the country manager for Spendbase here in the Nordics. And we got three services going on that I think you guys are going to be interested in. First of all is just like Ed's, we have SaaS optimization and cloud optimization, right? So what we do is we partner with thousands and thousands of software vendors, which enables us to grant partner discounts at a high rate to our clients, meaning we just apply these discounts, and that's the commission that we take from our customers. So that's the first service that we got going on. The second of the services is basically we have a platform which enables our customers to have a very, very transparent view of what they're using today when it comes to software, what they're not using at both a app level, but also a individual level, meaning that you don't have any ghost stack, as we call it, which is basically application software that you don't use, but you're still spending. So transparency is the second one. Third service that we're providing, well, it's 2026. And Kevin, you said that the tokens are, well, being consumed, and that's putting it lightly. We're in an era now where we're just throwing money at AI, but we're really ignoring the bills. And I think this is going to just catch up to us. So what we got going on is something called LLM API, which is a platform which unifies all LLM models in one or under one roof, but also at the same time gives you massive discounts for those LLMs. So more on that later.
Yay, brilliant. Looking forward to it. I think this can be a really interesting afternoon with very definitely a view on what's changed in this area and a view into the future as well. So I'm going to go back and share my screen for a short while. I suppose I should introduce myself. I'm Kevin Appleby. I am COO at Grow CFO and Head of Tech Partnerships. So one of my roles in Grow CFO is bring you webinars like today across our range of, oh gosh, I think we've got over 30 tech partners now. So there's always somebody interesting to find to talk about whatever subject we want to cover in these sessions. And alongside that, I also host the Grow CFO Show podcast. So I am background finance guy, done the roles that most of you are attending have done. So I'm also incredibly interested in what's going on here. Right. have I got just a second? That seems to have gone wrong. I'm not sharing screen. Hang on a minute. There we are. Can folks see that PowerPoint slide? Yeah, I'm getting a good nod from the panel. Excellent. So, as I said, we've done the introductions. We're going to go on and talk now for 10 or so minutes about the Tech Innovation Report. Something we do every quarter, and then we're going to go into the demos and presentations from each of the four folk that have just introduced themselves. So we're going to have the Q&A open. Please, as we go along, drop questions into the Q&A for the webinar. We're going to take them. If you've got any questions while I'm presenting the Tech Innovation Report, please just put them up there and I'll see if I can take them at the time. But as we go into each of the four individual sessions, we're going to have 15 minutes of presentation, 5 minutes at the end for Q&A. Okay, so please stack your questions up as you're going and we'll handle each one as we go along. We're also recording all of this, so the recording will be available on demand. Please don't worry about taking notes because you can go back and look at the individual bits of it. Okay, so Grow CFO, what do we do? Well, as I said, we do webinars such as this one. We do a webinar every couple of weeks with one of our tech partners, and every quarter we do these tech showcases. I'm host of the Grow CFO podcast, but on top of that, we've got all of the content in Grow CFO. We've got the online team training, a huge amount of AI training now appearing on demand in our team training members area. We've got the CFO programs for future and existing CFOs, and we do one-to-one mentoring, which is proving very, very popular at the moment. So that's Grow CFO. Tech Innovation Report. Well, Spend Management and Accounts Payable was the full title of the Innovation Report. There's a link on there that you can download it, but literally if you just go to tech.growcfo.net, which is where you signed up for this webinar, there's a tab on that page that'll take you straight to the report. It's white paper, it's 30 odd pages long. And as I said earlier, we explored this whole spend management area in Q1 2025. And we found there was a lot of changes going on in tech at the time, things that were starting to solve problems that had been around in this area for a long time, things that as a management consultant I'd come across in the past, helped clients get their heads around in various implementations, and found that there were some new solutions coming up. But we've looked at this again. And technology really has moved on in the last 15 or 18 months. And we've covered this again in the report. We've said, well, what's happened? We look again at what the problem is. Has it changed? Are there any new problems emerging? We've looked again across those problems at how technology can help. We've had a good look at what the benefits are that can be driven here. And we've looked at the cost of technology as well, which is where we're realizing that SaaS and cloud and AI are becoming a bigger part of this than ever before. Now, there are a lot of solutions in the marketplace, accounts payable, expenses, and so on. There are a lot of vendors. Okay, we've invited Use along today and Expensin along today because in Grow CFO we've got ongoing partnership relationships. That does not mean that they're necessarily the right solution for you. Okay, but how do you work out what the right solution is? Okay, so we've done a fair bit of work in the innovation report saying, well, what should we be looking for? What is it that makes a difference in this area? Okay, so please download the Tech Innovation Report. There's a lot of good stuff in there at tech.growcfo.net. Okay. But what has changed since the previous report? Well, AI-enabled AP and procurement workflows. That's the biggie. 18 months ago, we were starting to talk about agentic AI. We were only just starting to get our heads around it and what was possible. What we've seen in the last 18 months is that just about every solution out there in the market that you might care to look at has implemented some form of agentic AI to do various things. And that's the first thing as you're selecting a product. Look at what the individual vendors have done, because not everybody's implemented the same things in the same way. And there might be an innovative solution out there that's a better fit to your business than to others. There's no one size fits all here. Okay. So AI enabling is the first one. One of the nice things I think this has brought in this area is stronger fraud and vendor master controls. Now, I go back in my own career, gosh, more years ago than I care to remember. And shortly after I qualified, I ended up joining ICI. ICI don't exist anymore, but at the time, Imperial Chemical Industries, they were number one in the FTSE 100. They were big, they were huge. An internal audit, one of the very first assignments I ended up on was auditing our own internal purchasing and supply department. And we knew whenever we went in there, what we were looking for wasn't were all the controls okay, because we knew that probably weren't somewhere. We were actually going in there and looking for frauds. Frauds are rife in this area. And for as long as anybody can remember, people have been finding new ways to defraud the purchase to pay system. One of the brilliant things that's happening through AI is that I think there are much stronger controls in this area than ever before. Okay. But there's a flip side to that. And going over those transactional processes, whether it be purchase to pay or whether it be expenses or other areas, governing the agentic AI is in itself becoming a big issue. How do you control this AI thing so you can trust it, so you know what it's doing, so that it's secure, so that it's not making its own decisions, it's not hallucinating? That is a very, very big thing in this area. And this is an area, accounts payable and so on, being very transactional, is one of those biggest places we're going to be seeing agentic AI make a difference. So how are we going to keep control of it? When the auditors come in, how are we going to convince the auditors that the AI has done the right thing? And as we've mentioned in the intros, SaaS and AI spend control are becoming an increasingly big thing. Software as a service. Everybody wants to bill that way now. If you can possibly work out how to have a recurring bill, that's the way to do it. And SaaS billing, I've noticed over the last 18 months, has become much more usage-based. It's not just one flat fee each month. There tends to be a variable element in it now. AI spend control. As we're implementing AI in our organizations, we're consuming AI tokens. Okay, AI is supposed to be saving us money, helping us with the process, freeing time up. And maybe you think, well, okay, AI is bound to be cheap compared to the HR costs we can save. Well, I'm not saying many people save many HR costs at the moment. And I think AI spend is something we're going to have to keep a very close eye on. So we go into all of these areas in a lot of detail in the Tech Innovation Report. And really, this is a reason we've chosen the 4 vendors to come along today to tell us what's going on in their particular areas. But the control challenge is very much one that I'm hoping might come out in here. Automation is rife. And great quote that I picked up from one of the big 4 white papers as I was researching this was the idea that automation isn't the absence of control. The winning model is controlled autonomy. You've got to give the AI agent a little bit of autonomy to do its job, but you've got to control that. The areas that are rife for automation are capture, invoice capture, purchase order capture, delivery note capture, coding, routing, insight. AI can add a lot, but you've got to keep the human in the loop. That is the first key thing in this control challenge. Now, 18 months ago, when we last looked at this area, nobody was using that phrase, human in the loop. I now hear it at least once a week. That's a huge change. You have to have, in this area in particular, where you're committing spend out of the organization's door, you have to have the human in the loop, particularly as the risk is high, the value is high, and this is the area where there are lots of exceptions. Don't necessarily want the AI sorting out the things that fail the process, that are the exceptions to the three-way match and things like that. You probably want the human to be looking at some of that stuff. Segregation of duties is the other big one in here. You have to treat segregation of duties when you're using AI agents in the same way you do with humans, right? You may have an AI agent that's setting up a new customer or a new supplier. You don't want the same AI agent then approving that new supplier. You don't want the same AI agent setting up the bank details, things like that. Okay? You want to make sure that these agents are separate. Okay? You don't want one super agent doing everything. You want to keep this in and segregate duties in the same way as you would before, and some of that segregation of duties should be passing the approval off to the human. Okay. We looked at that in the last quarterly tech report in quite a big way. Okay. You can go back to Q1 tech innovation report where we actually looked at AI native applications. So governance of those was a big thing to cover. And we said in there, look, you've got to make sure you understand the level of risk and put the control in as appropriate. Human in the loop probably isn't very important when all the AI is doing is going read only, and it's perhaps producing some variance explanations and things like that. But if you get down to level 3, where the AI is actually executing stuff, the risk starts becoming high, and that's the place you've got to make sure you've got controls in. You've also got to think very, very much about what the auditors are going to ask. Now, authorization, who approved it and where's it evidenced? If an AI agent approved it, it has to be evidenced in the same way. Is this transaction traceable? Can you reconstruct what happened and why? Completeness and accuracy. Resources were used, are they controlled? And change control is totally important. Who signed it off? You must be able to explain everything to an auditor. But enough about governance for now. So what does good look like in 2026? Well, modern spend management stack should, first of all, improve visibility. Okay, you must have better visibility. The costs that you've got, you should be able to understand better out of a great modern stack. Okay, there should be stuff in there that prevents off-policy spend. Okay, that's one of the easiest ways to automate. What's stopping the purchase order going in for stuff that we don't want to spend, or the expense claim coming in for stuff we don't want to spend, or indeed the SaaS cost that's no longer part of policy. We want to reduce manual transactional work. Okay, nobody likes doing it. It's plain boring. That is the big place you want your modern stack to really help you. You want to reduce that manual work. We're talking in the SaaS field. We want the stack to help us manage renewals. We wanted to detect anomalies. Coming back to the fraud piece. What looks odd? Does the system tell you automatically? Because the intelligence should be in these solutions by now. Very, very important that you need good integration with ERP or whatever accounting systems you're using, and into your FP&A system if that's something for you as well. Now, we should be getting out of any rekeying numbers in this age. The system should do that for you. And collaboration between CFO, CTO, and the head of procurement is really essential. So the stack should be making that collaboration more and more possible. Okay, so that's what good looks like. So vendors today. Why did we select the vendors? Well, I look at this in terms of what's the CFO problem that we're trying to solve in this area. Well, we look first at supplier invoices P2P. The first problem, we want to get rid of manual AP. We want to get rid of approval delays. We want to get rid of risks around invoices. So we've invited Use along today to show us some of that. Okay, Use aren't the only supplier in this area. There are many in here, but I think we'll see a good explanation today of what's going on. Again, there are many different employee expense solutions, but the problem of controlling all of those expenses coming in, the number of cards that are now around the organization, when people are using that card, is it complying with the policy? Are we rejecting expense claims all over the place? How can we make that reimbursement system smoother? So expense in is a great solution in this area and integrates with a lot of stuff. So it's well worth looking at. So the next area, SaaS spend. If I was going in these days to do a cost reduction project in a client, and I've done many in the past, traditionally we'd start with doing some zero-based budgeting. These days, I think I'd start by looking at, show me all the SaaS agreements that you've got sitting in your purchase ledger, sitting in your general ledger, and going through each one in turn and saying, is there a business case for that still? Are you still using those 100 licenses you bought? And suddenly discovering, no, you're only using 20 of them. Now, there's great control over this area when you very first take out the subscription. But when that subscription's been running 2 or 3 years, nobody really bothers looking too closely. It just gets renewed. The spend stays there. And in fact, some new software has been bought during the year. So ever increasing SaaS spend. A lot of these solutions duplicate each other. So you may find that you're buying now 3 different SaaS solutions to do the same thing. So spend base are going to tell us a lot about controlling that. And we've already talked about that AI consumption problem, the usage volatility that we're going to get around the cloud. So Cloud Capital are going to come and talk to us about that. So we've got an interesting afternoon ahead, and I must admit I haven't looked at the Q&A to say what's coming up at the moment. Let me just quickly do that. No open questions at the moment, which is good. So quickly, what to watch when evaluating solutions. And quite often folk will go into a vendor demo, and I know I've done many on behalf of clients, help them choose a supplier. You're going to see some demos this afternoon, probably not enough of a demo to start evaluating. But if you're looking for solutions in this area, does it fit your processes? Don't be fooled by the processes that get demoed to you. Check that it fits your processes, especially if they're not standard. One trick that I used to use in a supplier demo is actually give them something to demonstrate in the up front that was a real situation in the particular business. Okay, how good are the controls in the system? This is an area we need strong control. So what's the product bringing you? Does it integrate with whatever you need to integrate it with? What's the visibility of information like? Does this make your spend more visible to you? Is this going to help you control cost? How is it governing AI? Ask, where's the AI being used? What does it do? How do you keep it under control? Always a good question is, how easy or hard is it to implement this solution? And what's the return on investment going to be? That's the big one. What's the business case for doing it? Okay, so that's the Tech Innovation Report. Go and have a good look at that. But right now, Johanna, it's over to you.
Hi, thank you
And
so
we are
much.
absolutely on time.
Amazing. I've just shared my screen. Could I just confirm that that's visible to everyone as
That
well?
is visible, yes. Yeah.
Wonderful, lovely. Well, hello everyone, and thank you again. As mentioned at the beginning, I'm Johanna, and over the next 20 minutes, I'll give you a quick overview of the business first, and then, as mentioned, I will walk you through a live demo of the platform so you can see how it works in practice. You'll also see that a poll's just popped up on the screen, and it would be great if you would like to submit in the poll. It'd be really great to see what you, how often really, and how many hours it takes you to process those expenses. The aim here today is to give you a clear picture of how Expensing helps organizations simplify and take control of their expense management without adding complexity for finance teams or employees. So, what I'll do first, as I mentioned, is just give you a bit of context on who we are as a business and why what we do has become even more relevant over time. Expensing was founded back in 2015 to take away the frustration of managing expenses. At the time, many organizations were relying on spreadsheets and manual processes, and that's something we still see a lot of today. But what's changed is the expectations around visibility, control, and efficiency, especially for finance teams who are now being asked to do more with less. Since then, we've continued to build the platform around those evolving challenges. In 2021, we introduced our invoice module, bringing expenses and accounts payable into one place, so finance teams have a clearer, more complete view of spend. We've also focused heavily on flexibility. In 2023, we launched our ad hoc module, which makes things much easier for one-off claimants, but also for finance teams managing a large number of ever-changing users, something that we're seeing more of now, particularly with charities and volunteers. And more recently, we've introduced carbon reporting. For some organizations, that is now a requirement, and for many others, it's becoming increasingly important. So it's about giving that visibility without adding extra work. Over the last year, we've also been acquired by Accounts IQ, and we launched our own expense card, which is a fully integrated card directly into the platform. So everything sits in one place, giving real-time visibility and control over spend. So overall, it has been a steady evolution shaped by increasing pressure on finance teams to have that visibility, that control, and to do more with less when it comes to managing spend. So before I jump into the demo, I just wanted to give you a quick sense of the scale of what we do today, but also why organizations choose Expensing in the first place. We've now been in the market for over 10 years, and during that time, we have grown steadily, which really comes down to solving a problem that most organizations still face around managing spend. We process over 1 million expenses each month. So, what I'll show you shortly isn't just theoretical, it's something that's being used day in, day out by a wide range of organizations. One of the things we're really proud of is our customer retention. We sit at around 98%, which for us reflects not just the product, but also our level of support that we provide alongside it. And we also support organizations in over 50 countries. So whether businesses are operating locally or a bit more globally, the platform is designed to scale with them. And finally, support is a big part of what we do. We average around a 90-second response time on live chat, and we're highly rated on platforms like Capterra. So overall, it's about giving organizations a solution that they can rely on, but also a team behind it that's there when they need it. So with that, what I'll do now is jump into a demo of the platform. So what we're looking at here is the web portal that a generic end user will see anytime they log into Expensing. Firstly, they're able to see an overview of any of the expenses that they've processed historically, and they can also see information on their active expenses. So whether they are in awaiting approval, awaiting payment, they have that visibility of seeing the status of their expenses without actually needing to contact a manager or finance to find out. Within the web portal, they also have the expense policy. So, of course, these are the rules and guidelines that are set up in the background of the system. So that way, when any expenses are submitted, they are automatically validated against that policy. They're flagged upon submission so they can understand if they've gone against the rule, and this is fully visible to finance and approvers so they can decide what they'd like to do. So at this point, I would actually like to go into our mobile app to show you the expense creation. We find when it comes to actually creating and submitting expenses, it's much easier in the app. When you're on the go, being able to snap a photo of the receipt is obviously the better option. If they're anything like me, I always tend to lose my receipts. So being able to upload it there and then means it eliminates that issue. So within this app here, if I select this camera icon at the bottom, I can take a photo of my receipt to upload that and then enter the memo. So the memo is simply the description of the expense, which will be seen by the approvers and finance. And then we have the purchase methods. So whether this is out of pocket and paid for with my own funds, or a company card, or even a fuel card, and also our very own expense in card can be selected here. For this example, I am sticking to out of pocket and I will upload that. So with expensing, we do use AI receipt scanning. And all that means is the data within the receipt will be extracted using AI, information like the date, the amount, the merchant, and the currency. So it means the end user doesn't need to manually enter that information themselves. If I tap on the receipt, I can create it into an expense right at the bottom and select purchase. So here we can see information like the date, the merchant, the amount, the currency have already been input into the form. The VAT has also been applied. That memo has been entered in as the description. And then we have the category. So we also use AI for auto categorization on the categories. That means, again, it's just removing that manual action for the end user when they're creating those expenses. What's useful to add with the categories is that they do have the relevant coding in the background as well for the accounting system. So when it comes to exporting this information or posting it into the accounting system, you know it's all coded correctly and it's not manual. The same can be said about the projects as well. If you are handling any projects with your expenses, you can link it to the relevant project, and therefore it then is posted into the accounting system as well. Within expensing, it also allows you to extract reports on these projects so you can manage and monitor the spending on them. So we can see that the majority of the information had been input through that AI scanning. The user simply needs to check that they're happy, verify it, and then they can save it at the bottom. So from here, within the app, if I wanted, I could submit the app right at the bottom, submit the expense, sorry. But I'm not going to do that just yet. What I am going to do now is go into our web portal and show you a mileage expense creation. So we can see this on both devices. So within the web portal, we have this unattached receipts area. What I've done is I've actually uploaded a receipt prior to this session, and I simply did that via selecting on the device that I'm using. Of course, I can also forward receipts into expensing as well. What we find is that nowadays we're getting a lot of digital receipts as well. So being able to forward those receipts right into the system is much easier than downloading and uploading them right in. When they are forwarded, they simply reside in this unattached receipts area for the user. So from here, I can create it into my expense. We can see the data has already been scanned and I can choose mileage. I can see the expense claim form is similar to before. I can enter my date of travel, my mileage category has been auto-applied, description and project can be applied as well. The main difference for mileage are the journey details. So at expensing, we integrate with Google Maps for journey distance calculation. So if I simply type in my location of where I'm traveling from and to, we can see that distance has been calculated automatically. If I've done a return on that journey, I can simply tick that and then it's auto-calculated that. What's also useful is that with this plus icon here, I can also add additional stops for my journey. And this means if I am traveling to multiple places within the 1 day's journey, I don't need to spend the time creating multiple expenses for that. I can do it all within one place, and then that distance will be auto-calculated with the information I enter. It's always best to use postcodes as well, so that way it's more accurate as possible, but it just gives you an idea of how simple it is to enter this information in. So now that I've created these receipts, they are sitting in my draft area ready to submit. And what I do want to highlight here is I mentioned the expense in card before and how it's a fully integrated solution. What's useful to add is with any sort of expense in card transactions, whether it's online, in-store, Apple Pay, Google Pay, as soon as the payment is made in the real world, the expenses are automatically created within the system within seconds. So for the end user, it's even less work for them. They don't need to create anything. They just need to attach that receipt. So before I submit anything, I just want to expand this mileage expense. What's useful to highlight is that it's calculated the amount of carbon emitted. So as I mentioned, we do carbon reporting for various travel and accommodation related expenses, and they can be exported to reports. With mileage, we can also calculate the VAT on those mileage journeys. So if you are a business that reclaims the VAT on mileage from the HMRC, it's calculated for you, making those reclaims even easier to process. But let's now submit these expenses. And we now see the policy issues. I'd shown the policy issues at the beginning. If any of the expenses are flagged against the policy, they'll be visible upon submission for that user. These policy issues can be set up as blocks or warnings. And as you can see, it identifies this as a duplicate. And of course, this is my demo account. I've used this one many times before. But this way, if you wanted to set it up as a block, it means the end user cannot proceed. They simply need to have a completely different expense. Of course, some policy issues may need to be handled on a case-by-case basis, and therefore you can set it up as a warning, just like mine, where you can continue and verify through approval and finance. So that's what I'll do now. I've now submitted the expense. And what I'll do is log in as an approver so we can see this workflow through to approval. So any approver, when they log into Expensing, will see this approval section. It's useful to add that they will receive notifications via email and via the app, and they can also approve or reject via the app as well. But I'm going to stick to the web portal today. So we see these two expenses that I've submitted, and immediately we can see the policy issue has been flagged. That approver can see exactly what policy issue has flagged against it, so they can then decide whether or not they want to reject or approve that. Expanding this expense, you can also see the details of the expense itself, that category, the department, the VAT, and the approver can cross-check that against the receipt. So that way they can verify everything and then choose to approve or reject. So from here, I can reject if I wanted, enter a reason, and that would go back to the end user, and they would see exactly why it's been rejected. That way they can then amend, resubmit, or delete it altogether. But I'd like to show you this expense process all the way through. So what I will do is approve these expenses. One final thing before I move over to the finance area is that with approval flows, they are flexible. You can essentially set up multiple levels of approval flows. If you have one person approving an expense and you want another one to approve it afterwards, you can set it up that way. You can also set up conditions on approval flows. A really popular one for our customers is setting up a condition for expenses above a certain threshold. For example, when expenses exceed £200, you want a second approver, you can set it up that way. And if it's under £200, it sticks to the one single approver. And that way you've got assurance that these expenses are routed to the right people, but only for the right reasons. And that is all automatic and systematic. There is no manual intervention on that. So we've seen that expense submission, we've seen the approval, and so the final stage is the finance area. So within finance, we have this overview here. It's really useful for the finance teams because they can get a nice overview of everything happening within the business. They can see the expenses based on purchase method, department, and also the status, whether anything is in draft, waiting to submit, awaiting approval, and also everything approved. It just gives them that visibility that they can understand what expenses will be coming into them so they know what they will soon be processing. This then takes us to the approved section. Now, this approved section on the left, I always describe as a to-do list. If you see any expenses here, this essentially means these expenses have been submitted, they've been approved, and they now need processing into the accounting system. So we're going to go to these two reimbursable expenses that I'd created with you today. And for finance, they have the same visibility that the approvers did. They can see those policy issues. They can cross-check the information against that receipt. They can also reject it at final stage as well. So if they see anything that they do not want to process, they have the control to be able to send that back to the end user. And they can also edit anything as well. If they find the category and the coding for that had been incorrectly input, they can amend that. So that way they don't need to send it back and start that whole process again. They can simply amend what they want to. And that way, before it goes into the accounting system, they're confident with the data that they're pushing through. So to post that information, we actually have two options when we integrate with many accounting systems. So you can post within just a few clicks, just through this export button here. You can see some of the accounting systems on the screen, but we actually do integrate with more than what you see. Or if you are using an accounting system that we don't currently integrate with, we have a file export option. We can set up a file export that matches what your accounting system requires. So you can export it to a file directly from Expensing and then upload it without needing to do any manual edits on the document. But what I did really want to show you all today was the direct integration, as it is really so simple. So I'll use Accounts IQ as the example. When you're posting into it, you simply click and then export, and then the details within that expense is taken and posted straight into the accounting system within, as you saw, just a few clicks. Within Expensing, that data is now being cleared from the approved section and moved to completed. It's now residing in where all of the historical expenses are. So if you have audits, you can always find that information, but it's processed right to the end. That was just a very quick high level overview of Expensing and really just giving you a flavor of what we can do. So I guess next, any questions?
Johanna, that was brilliant. I thoroughly enjoyed that. We have got a couple of questions coming in. First
Excellent.
one is about VAT GST rules. Are the rules, VAT rules, built into the system, or are you
Great
just purely
question.
picking them up from the invoice?
Yeah, no, that's a great question. So yes, there are. There are policies that you can set up for the VAT. So it can be various policies, things like checking that there's a VAT number on the receipt, ensuring that the VAT on the receipt does not, sorry, the VAT on the expense does not exceed the VAT on the receipt, ensuring that with mileage expenses, the date of the receipt matches within a 2 weeks of the mileage journey, so you can reclaim that VAT. There's lots of policy rules that specifically relate to VAT. Yeah.
Yeah. Second question. It's to do with the journeys that you were showing. Do
Mm.
you need a separate fuel receipt for each day's journeys, or can you link multiple days' mileage to one receipt?
That's a really good question and one I get asked quite often. So when it comes to mileage journeys, you will want the receipt for reclaiming via the HMRC. And as I just mentioned, if you want to reclaim that VAT, the receipt must be within 2 weeks. So if you have multiple days worth of journeys, you can use the same receipt as long as it's within those 2 weeks. You don't need to have a different one every time. I know it'd be very annoying having to fill up your car for every single journey. So rest assured, the HMRC definitely accepts using the same one as long as it's within that 2 week window.
Brilliant. Morale is asking, when exporting expenses, do the receipts get exported too? Saying brackets NetSuite, for instance.
NetSuite. Good.
And for
Mm.
linking credit cards, can a credit card feed be set up?
Yes. So with the exporting of receipts, NetSuite doesn't currently allow for the posting of receipts. Some of the other integrations we have, such as Zero and Accounts IQ, you can export the receipts for them, but not with NetSuite. We do have the file export that you can export the receipts on, but not directly through the integration. In terms of the company credit cards, we also do offer data feeds as well. Yes. So if you're using a card provider that uses Visa or MasterCard, we do have a data feed where you can essentially set that up once, and every time a transaction is made, they're fed into Expensing. And similar to what I'd mentioned about the Expensing card, where the expense is automatically generated, this also happens with any card feed. So if you're using Barclaycard or any other card provider, through the data feed, when that comes in, it creates an expense for the user. So they just need to attach the receipt.
Brilliant. That, I think, covers all the questions at the moment. Gosh,
Mm.
guess what? We're absolutely on time.
Oh,
So I'm
wonderful.
expecting any moment. Oh, there she is. Celine has just popped up.
Mm.
Johanna, thank you hugely for that. We'll see you again at the end for the round table.
Thank you very much.
Okay. Celine, over to you.
Thank you. So let me share my screen. And if you could just confirm that you can see my screen correctly, the presentation. that would be very helpful. I guess
Got
you
it.
do.
Coming through nicely. Yes.
Yes, perfect. Thank you so much. Once again, I'm Céline Duplessis working at Use. So who is Use? Use is a company which is dedicated to AP automation. And so we were founded in 2010 as a cloud-based accounts payable automation platform to provide a flexible, user-friendly, and scalable solution. Our goal is to address market gaps by offering an affordable alternative and complex, expensive on-premise systems. We at Use strive to enable businesses of all sizes, and that's very important, to benefit from AP automation with scalable pricing based on document volume solely. Use, as you can see in blue at the bottom of the slide, Use reinvests 25% of its revenue into R&D, fostering innovation and proprietary AI-driven technologies. Use has published over 100 scientific papers on artificial intelligence and machine learning, and so we really want to bring the best technology to our clients. Also, you can see that we serve more than 7,000 clients in over 50 different countries, which represents 400,000 user companies and over 200 million documents that have been processed on the Use platform. Now that I have presented Use, we also have a team which speaks more than 30 languages, some different nationalities. And so we will be able to discuss with you where, no matter where you are located. Here you can see some of our clients. So remember, I said we were working with 7,000 different companies. And so we have put out big companies here, but do remember that we can work with smaller companies as well. It's just so you can see that we can work with different industries. And so with Use, the good thing, one of the good things is that you can connect to more than 250 ERP systems in the system. So we will be able to connect your system to Use either with an API, an SFTP, meaning that the data will go from your ERP to Use in real time. It'll be totally transparent to you. And so we will be able to take the data from your ERP system to Use and from Use to your ERP system. And so that is a bidirectional data exchange. We also work with financial and accounting systems. So here you have big names, but also, once again, we can work with smaller ones. And so they use internally, and they also recommend Use to their clients, meaning that they can recommend Use, and they push Use because Use was thought by experts and is used by experts as well. So I'll show you during the demo. Here you can see with this slide how much is your AP process at risk if you don't have automation. So, for example, your AP process can be complex if it's manual, and it can take from 22 to 35 days processing invoices. And so then you can see that the manual cost is between £9 to £20 per document. Also, we have 30% of invoices which are said to be in late payment. So we do some surveys to our clients, and so that is what that's what came up to us. And they said that before using Use, this is the situation they had, and also because of a lack of visibility, there are 3.5 errorness or double payments, which you won't have anymore with automation because the invoice will be automatically recognized. So I'll show you an example as well. And also 70% of companies said they had been a victim of fraud attempts. And with now this new regulation coming in all the countries, you need to be compliant. And so with Use, you'll be able to be compliant with other countries, with many other countries. And so this brings me to showing you this slide. So use is made out of different modules that you'll be able to activate or not, depending on what you do. Meaning that one company can have a very complex use platform when another one can have a very simple platform. So we will totally adapt to the way you want to work. So for example, here, so you can see that we can automate your entire P2P process. And so for the companies who are interested in doing the matching between the purchased and the invoice, it is possible to either do it directly in use, or if you want to stay with your solution you're using today, well, it is possible to import lines into use. And so then use will be able to do the matching between the lines or the purchase order that you'll have done in the platform, and to match it with the invoice or with the reception and the invoice. So we can do either ones, either the two-way or the three-way matching. So that's the first module that you can see on that slide. And so once imported or created in use, these we will be able to capture the invoices. And so we will be able to use different channels. I'll show you during the demonstration as well. So we can use emails, we can use the cloud, we can use vendors portals, and also use can recognize all type of document, meaning that all formats, meaning that you will be able to import standard such as Word, PDF, Excel file. Use will be able to recognize the data and then to manage the whole information of the invoice. And also, we will be able to have the artificial intelligence reading all the data on the invoice and then doing the intelligent classification for you within the platform. Once captured, you will be able to review, then to move to the review step that you see on that slide. We will automate GL coding and PO matching and automate vendor statement reconciliation as well, if that's something that you want to do within use. You will be able to approve the invoice using a workflow. So this workflow is very fluid, and you'll be able to have a workflow different per type of document, meaning that you'll be able to have a workflow dedicated to purchase request, then have another one for the purchase orders, and then have another one for invoices. So I'll show you an example, but you can have dedicated workflows. And because with use, you have unlimited number of users, you'll be able to have a user for each type of document or even more, meaning that you'll be able to give a role to a user. So then that user, will be dedicated to approve this specific document. So this is the workflow. And once your invoice will have gone through the whole approval workflow with the different person who will validate the invoice, well, then it'll go directly into the pay section. So I'll show you during the presentation as well. And so we'll be able to automate exports to either send the information in your ERP, so then you can pay with your ERP, or we can also do SEPA payments. And also we can have an export which will be in the format of your bank. So then you can just upload this file into your bank system, and then all your invoices will be paid. Once the payment done, you will be able to have an automated export to your ERP system. So then all the information goes in your ERP. Above these different modules that we've just gone through, you can see that we also have the no-touch. So the no-touch system is if you want to set up a fully automated, managed by the artificial intelligence workflow, meaning that we'll be able to give rules to the artificial intelligence, and then she will apply the rules, and everything will be automated, meaning that it'll free some time to you and to your colleagues, so then you can concentrate on more complex tasks. And all these little time-consuming invoices will be managed by the artificial intelligence and the automation. Now, if we look a bit down the modules we've started with, you can see that you'll also have the possibility of having use portal, meaning that you'll be able to invite your suppliers to join the use ecosystem for free, and then to exchange your invoices directly with them using this portal. And you will have access to a chat, a collaborative and intelligent, because you'll be able to chat with your vendors, but also internally. With Use, you'll also have access to the budget, as you can see just beneath. So you'll be able to initiate amounts for budget sections, and then it'll be possible to set up alerts. And so if you come close to the end of your budget, you can receive an alert in the platform by email and also on the mobile app. And so that way you will never go above a budget you wanted to respect. You will also have access to an archive. You will have access to a search engine, which works exactly like Google Search. You will have access to an audit trail, so that everything is done in Use is tracked and saved. So you'll have access to all the information regarding the invoice. And also you'll be able to reconcile, and you'll have security because our artificial intelligence will look for duplicates and will alert you if there's a duplicate. But not only, it'll also look for fraud. And so if a fraud was detected, you will receive an alert. It will detect the fraud on the invoice, and it will tell you this is exactly where the fraud is suspected. And so it can be on the IBAN number. It can be because the ink is different somewhere in the invoice. It can be different subjects that the artificial intelligence will find in the invoice. So this was an explanation. Now let's jump into the platform. There. And so once again, Use was made to fit to all companies. It's very user-friendly. We really want it to be user-friendly. And so let me explain you how it works. So it's fully in the cloud, meaning that you can use any browser. You will be able to access to your platform. Use is responsive, so you'll be able to use it on your computer, on your tablet, but also on your mobile. And remember, I said that we had an app, so you can download the app and you can continue working while commuting. So you'll have all the services in the app as well. And so how it works is that we will connect our platform to your ERP system. So we will upload all the master data. And so we'll have all the master data directly in Use. And so every time you'll do an update in your ERP system, it'll be automatically sent into Use. So you won't have to do the job twice. And so these here are all the different channels I was mentioning before that we can use to import automatically your invoices into the platform, meaning that you won't have to be looking after your invoices anymore on different websites. Everything will be directly imported in the platform. We will be able to set up emails address, the cloud, but also collect your invoices from vendors' portals. And so once all these invoices will be imported in your platform, it'll be automatically sent into My Task. So this here, you won't be coming into it because everything is automated, unless you want to upload manually an invoice using this module here. Once the invoice is imported, you'll be able to see them here in this section, imported file. So you'll be able to have a lot of information on the different invoices, and you'll be able to see if it was the document type for which organizational unit, who imported it, and so lots of information. This here, this channel, this well, if you click on it, you'll have access to a window which will open, which will ask you for which organization you want to have access to. So you can click on the axis. And so then you'll have access to this window here. And so you can see that you'll have access to lots of different vendors portal. And so you'll be able to check by category, but also by countries. And so see, it's worldwide. So you'll have access to lots of different portals. And so all you'll need to do is just put in your login, your password, and then it'll be connected to your use platform. You won't have to check these portals anymore. Your invoices will come directly into your platform. And so once captured, as I mentioned, your invoices will come here. And so that's where I'm going to show you a few of our new features, such as the line by line. So Use is capable of doing the matching between your PO and your invoice. And if it's a multi-line, we will be able to manage the multi-line. So let me show you an example. For example, here, this payable invoice PO based, the vendor is Dell. It's an accounting matching. So I've got the amount, I've got the currency. And so if I want to check the invoice, because here I can see that the completion rate is not 100%, and normally, the artificial intelligence will recognize all the data, will recognize the vendor, will pre-populate the fields for you. And so the invoice should be 100% completed. So when it's not the case, that means that you need to do something on the matching, for example, on this document. And so Use will always tell you here on the top left side what are the reasons for this non 100% completion rate. And you will be able to check the invoice. You will be able to check all that the AI is recognizing. So see this yellow rectangle, that's the AI reading the information on the data. So it's not a template. It's really the artificial intelligence reading the information and then pre-populating the properties of the invoice for you, meaning that, see, it has recognized the vendor, the date. So if I click here, it'll automatically show you in the invoice where it found the information. And also I can continue here. If I want to change the currency, it is possible. We are connected to the European Central Bank. And so here you can see that it has pre-populated the PO for you because it has recognized the PO. And also you have the all the lines here at the bottom. So this is the invoice line. And you also have it here in the invoice itself. So if I want to have a more visible, so see how intuitive it is, I can change how it's going to be on my screen. So there, so you can see that here I have all the lines and also I can see the different lines here. And if I hover over the lines in the invoice lines, you can see that it moves on the invoice itself as well. So this is very handy if you want to compare both lines from the different documents. And so you can see that we have a green color, we have a purple color, and a gray. So the green one is because so I can see that you are coming, so I'm going to move quick. So it's just to say that the line was matched perfectly well, that the line, it needs to be looked at. So you can see that the artificial intelligence has underlined the part, the column that didn't match with the invoice. And also the gray one is for the lines which had more than one problem. And so Use is going to suggest to you some lines from the invoice line, so then you can match it with the invoice directly. So this is one of the new features I want to show you. There are so many other ones, the frauds, the credit notes we can manage, but I guess it's time for the questions now.
Helps if you unmute yourself, doesn't it? So, Celine, you mentioned AI there in this particular case. One of the others I heard you mention, was I correct in saying that AI is checking the invoice as it comes in to see if it's been tampered with? Different colored inks or things like that, typefaces.
Exactly.
Gosh, that's amazing.
That is very handy. And one thing that I couldn't show is that, for example, if I click here, the artificial intelligence will suggest to correct. And if I do so, then it'll become green.
Right. So, where, briefly then, where else is AI doing clever things in here?
Oh, everywhere in the platform. So the AI is going to read the invoice as I showed and is going to pre-populate and put all the information in the properties of the invoice so you don't have to do it. So there's no errors, typing errors anymore. And also we're going to do reports. So you'll have access to real-time reports with data, fresh data. So the AI is a bit everywhere in the platform.
Gosh, right. So I know that we've only touched on the surface in 20 minutes.
Yeah.
It's really seeing some of these things coming through, I think is quite amazing these days. And that idea of just spotting that fraudulent invoice that had been tampered with just blown my mind.
Oh, yeah.
I never thought of trying that one. Yeah.
Well, I can show you, but I don't know if we have enough time. But yeah, we do have this fraud system that I wanted to show. But yeah, so you'll have a fraud alert saying that there is a fraud in the invoice.
Yeah.
And so it's going to give you the whole analysis of it, and it's going to show you in the document itself where the fraud is.
Yeah. Yeah. And that I think in accounts payable, yes, there's automating the process and taking manual work out, but spotting these things that were in the past just relying purely on the human eye pick up. And in a busy system where you're processing hundreds and hundreds of invoices a day, picking them up is very, very hit and miss. AI can do that and do it in exactly the same way on every document, which I think is fantastic. So
And so
I think we
quickly.
covered the open questions. Celine, that was great.
Thank
Put a
you.
poll up if anybody wants to know any more about use. Please just tick the line on the poll. And I'm waiting for Ed to appear. And right on cue, here's Ed.
Here I am indeed. Hi, Kevin.
Celine, thank you once again. Ed, take it away.
Thank you very much. Let me share my screen. And, if you can see this, should all come through now. Well, thanks everyone. Really appreciate the time. It's very interesting topics. Everyone's talking about obviously around how AI is having an impact on all of these amazing products. It's also having a huge impact on the P&L of every technology company. And so today we're going to really focus in on how actually, as you're building your own technology, as you're building your own software, how your compute and AI spend is rapidly changing, rapidly growing, and how you can take control of that, how you can get visibility, predictability, and drive real material savings from your compute spend. So what I'll do, hopefully you've all fantastic, the poll's out as well, so we're going to dive into this. So I'll introduce a little bit about Cloud Capital, and actually, first of all, talk through some market research that we did very recently with over 100 CFOs to really get real clear benchmark information about what's happening out there, what people are spending on compute, how it's impacting their business, how it's scaling very quickly. And then we'll go dive into a real demo and walk through how we can help solve some of those challenges. As I mentioned, I'm Ed Barrow, founder CEO of Cloud Capital. We provide the financial control layer for compute and AI consumption. So if you're using Amazon Web Services or Google Cloud, or you're starting to explore using AI models like Anthropic, you're probably looking at some very large, very indecipherable invoices coming through from those providers and starting to wonder, why are these costs scaling very quickly? What can we do about that from a control, visibility, and efficiency perspective? We work with a lot of growth stage technology companies here in the UK and over in the US to help drive that level of visibility and control. As I mentioned, actually, this is a topic that I think is front and center with many organizations today. Compute has fast become now the second largest line item on most companies' P&L. So you've got your payroll, used to be rent, used to be other software costs, but actually now cloud and AI costs have very, very quickly become one of the largest line items on the P&L and one of the least well understood. It's really hard to understand how these costs are evolving. And so we
And
often
we've
see
got a quick answer from today's
Yeah,
audience of
let's
what those
see.
costs might be.
What did the poll tell us? I can't see
Yeah,
actually.
the poll is telling us that 25% of people that answered it's more than 15% of revenue.
Yeah, yeah. It's shocking,
And
but it's very true.
yeah, 13% are saying it's 5 to 10%, and the rest are saying it's under 5. Oh, we've got a couple that are saying not sure. But
Well, that's
yeah,
also often the challenge. Just trying to
yeah,
get a grip on what you are spending today, let alone being able to measure that and benchmark that. And we've seen very similar profile that you just described, and those have changed very rapidly. So we've seen those costs rise very, very quickly. And as I mentioned, in our survey we saw over nearly 90% of CFOs are actually really seeing these costs directly impact their gross margin and really challenged to understand how can you control these costs, because if you're seeing the kind of gross margin impact that a lot of companies are, it's starting to undermine. It's not just about cost; it's really starting to undermine your if that's sharing, yeah, fantastic. It's starting to undermine the unit economics of your business. So what we're going to talk about is really how that impact is how that's impacting your business today, and actually how AI is making this worse. And what we've also seen is just in the last 12 months is a rapid rise in the AI costs associated with compute. So you kind of traditionally had your Amazon bill or your Google Cloud bill, and that may have been there in the background and kind of steadily growing on the P&L. But in the last 6 to 12 months, you're really starting to see a rapid rise in actual AI costs, in model consumption costs, as you embed those in your products, as you use those as part of your business. And that is already, I mean, we did this survey back at the start of the year. That was already nearly a quarter of people's total compute costs. And I think we're going to rerun this very soon, and it's probably going to be significantly higher still. What's really important is cloud and compute has traditionally been viewed as an engineering problem. It's something that your engineering, your R&D team were there, focus on building your product and service on top of a cloud provider. But actually, because it's risen so dramatically in the P&L, and it's really now a joint problem and a joint challenge that we have to tackle across both engineering and finance. And what's really important is you've got to get those teams to work together. You've got to be able to communicate more effectively with the engineering team, understand when the bill comes through, why are you spending what you're spending, how is that scaling, what are their plans over the next 12 months that could impact that spend. They're developing new capabilities, they're re-architecting your product. And if you can align those teams, you get much greater predictability, and much greater confidence actually on your margin and how you're going to drive efficiency. And actually can save a material amount of money. So it's really important to have that shared control layer on compute, because ultimately this is not something as simple as a software as a service subscription agreement where you just get predictable monthly costs each month. This is highly volatile, driven by how your end customers interact with your product, how your architecture is developed, how your team are using these technologies. And so getting a grip on how your platform actually operates, how it scales, what your engineering team do is crucial to being able to take control and get much more efficiency. So how do we help? Well, we help in 3 ways. So the first is around providing transparency. I'm going to walk you through very shortly our forecasting platform. That is a free software platform that we provide. It's built for CFOs to really give you the visibility and the predictability over your spend. If you've ever used an FP&A tool, you'll be very familiar with kind of the user experience, but this is really all about your compute spend. The second part is that we can provide immediate relief on that bill. So if you're facing a rapidly rising compute bill, we can provide universal savings across your entire cloud footprint. We recently launched a 5% cashback. So if you are using Amazon Web Services today, you can switch your billing through to us as your merchant of record, and you'll get 5% back on every single dollar, every single pound that you spend on your cloud bill, and start to bring that back under control. And then thirdly, we go much deeper. So we're actually able to use the forecast that we build with you to make long-term commitments to your cloud provider where you benefit from the savings. So if you move from a kind of pay-as-you-go pricing, which is where everyone begins, into a committed pricing model, you can access really material discounts. But what we're able to do is make those commitments on your behalf where you benefit from the savings, but we actually take on the financial risk. So if we make a long-term commitment for you, and you use it, you get the benefit of all of those discounts and savings from that commitment. But if you don't use it, we continue to pay the cloud provider for you, and we cover that risk. So you can maximize the efficiency, maximize the savings without having to deal with the downside financial risk, and without locking your engineering team into a set of technologies and services they may not need and may not want to use in the future. So what I'm going to do then is let's dive straight in to an actual demo, and I'll walk you through, first of all, how we forecast and provide that level of visibility into your spend, and then let's talk about some of the savings that we can deliver. So let me share my screen, and hopefully you can see this now. So this is our forecasting platform. So what we do here is we bring in real-time data on what you're consuming from your cloud provider. We support Amazon Web Services. We're just launching also to support Google Cloud. And we bring in that data automatically from your cloud provider in real time. So you don't have to wait to the end of the month to when you get the invoice and try and decipher that. We bring that into the platform here. And first of all, what we do is we're able to automatically map that to your P&L. So it actually turns out that your cloud bill is not a simple one-line item that you should put into your cost of goods sold. Actually, typically, 30 or 40% of your cloud consumption doesn't actually relate to delivering your product and services to your customers at all. It's development, testing, training costs that actually shouldn't be part of your gross margin, shouldn't be part of your cost of goods sold. Our platform brings your spend in, understands all of the different technologies that your engineering team are using, and automatically maps that to either OpEx, your non-production OpEx, or into production costs, which go into your cost of goods sold and your gross margin. This is fully automated in real time, so you can close your books each month and really make sure you've correctly allocated those costs. And often, right out of the bat, you actually, through better understanding of your own costs, able to materially lift your gross margin. Then what we're doing is actually modeling that forward based on how your business is going to grow. So we look at your actual data, and we can break this down by what you've seen here, by production, by non-production costs. Within that, we can structure any number of what we call cost layers to break out those costs further. So breaking out, for instance, your AI and analytics costs separately from your database and storage costs, understanding how much you're spending on support and security versus the testing and development that your team are doing internally. So you have a really clear, easy to understand view of your compute spend. You can see here, we're not seeing anything that mentions AWS products and technologies. We've translated all of that into a finance first view. And we can really see very clearly what's actually driving those costs. If I dive into the testing section, I can see all of the individual services. So if you want to dive in and understand as those costs increase, what are the things your engineering team are using and how are those changing month on month, you can see all of the detail here. You can have a much more productive conversation. Say, okay, why are we suddenly spending a lot more on AWS SageMaker as part of our testing? Is there something that we're developing that we need to understand more, and how those costs are going to evolve? So we can automatically bring all these costs in, map those to how you should think about your business and to your P&L, and really understand what's driving those costs. And then we want to forecast that forwards. And ultimately, there are two things that are going to change your compute spend, what you're going to spend next month. And what I should say first and foremost is the last thing you want to use to project forwards your compute spend is just what you spent last month. Actually, that is looking in the rearview mirror just to look at what you have spent is not a great way to start. What you need to do is use that data, but then project it forwards based on actually what's going to happen in your business. So we can bring in two really critical bits of information. So the first is we can bring in your financial projections. So if you have your growth projections, your metrics for how your business is going to scale, whether that's revenue, customers, transactions, documents processed, case volumes. We bring this information into the platform very, very quickly. And then we're able to map that to, let me just find that here, map that to your cloud spend. So I can say, actually, I think all of my production costs are going to scale with case volumes, for example. And what our system's able to do is actually work out, as you grow as a business, as you add revenue, as you add customers, as you process another case in this example, what is the actual marginal cost? So in this example, it shows that actually for every 1 unit of case volume, it's going to increase the cost by $11.07. So if you ever ask that question from your board, from your investors, what are the unit economics of our business? How is this going to scale over time as we grow? you have that information automatically calculated and then projected forward. So as your volumes scale, you can really see how your compute is going to scale. And obviously, that's not a simple thing to work out. Some services will scale quickly, some won't. Some things will lag behind your revenue or your customer count. Some things will be much more kind of upfront costs. And the platform does all of that heavy lifting for you, so you can understand exactly how that scales. And we also bring in your engineering roadmap. So if your engineering team are sat there with plans to change your infrastructure, to launch new products, try out some new great AWS or AI models, we can actually model that in here. And you can just talk to the platforms. You don't need to understand the financial impact. I can just ask the platform, what's going on? I can ask them what's going on in this example with my S3, my file storage. How much are we actually spending on this service today? What could we do to reduce these costs? And let's model that. Let's say, okay, let's plan to do that now. Let's understand what we're spending today, understand what we could save, and immediately apply that to our financial forecast, apply that to our roadmap. And so what we're able to do here is immediately connect the engineering side of the world with the finance side. So your engineering team are sat there understanding the technical roadmap of what you're going to do. And we can translate that technical view of your infrastructure over to the actual financial impact. And you'll see here just pops up an immediate initiative that we've got as an engineering team. And we can see clearly it's going to kick off in July and it's going to save us about $3,000 a month. That was no complex backwards and forwards and spreadsheet modeling. It was an immediate understanding based on what your engineering team are talking about and how we can really impact those costs. So this is a complete forecasting platform, gives you that visibility and predictability over your spend, and it's completely free. You can sign up for this, you can access this, you can use this as part of your core collaboration and planning between your teams. But off the back of this, we then can drive really material savings for you. So what you can see here just right now in the platform is what our system does is it goes off and looks at that forecast, looks at that spend, and identifies all of the potential savings we can drive for you. Whether that's volume discounts, so in this case, 2% off every dollar that's being spent, or we can actually make commitments on your behalf where you will benefit from the savings and we take on all of that financial risk, all of the lock-in risk. And so for this example, this is an organization spending just under $1 million a year on compute, and we can immediately, automatically save another $67,000 off of this compute spend with no financial risk, no additional cost, no lock-in. That is just straight material savings, impacting your gross margin, impacting your bottom line, and making sure that you're being as efficient as possible with every dollar that you're spending on this super critical and probably the fastest growing line item on your P&L. Kevin, I've seen you jump back on, so happy to answer any questions if they're popped through.
Ed, I am really impressed. I love that way that you could just break out those costs between what was production cost and what was development cost.
Yeah. It's a super difficult thing to do if you're sat there with a 70-page PDF that's come through several days after the end of the month. It's an indecipherable mess of technical terms, and you're struggling to work out how do you process that? How do you make that allocation super simple, super easy? We do that straight out of the box immediately. And actually, it can really make a big impact on your gross margin and how you think about your business.
Yeah. And I'm thinking back to practical projects that I've done around activity-based costing.
Yeah.
And a tool like this that can just take that block of what is becoming bigger and bigger cloud cost and actually say, what is driving this cost is a very powerful tool. Not just in, you showed that flipped over into discounts.
Yeah,
but
absolutely.
If you know what those costs are and you split them out according to what's driving the cost, you can challenge and say, and why are we spending this? Are people actually developing something that we're going to use in the future, or have we got a massive development cost because the engineering team are playing?
Absolutely. And often the challenge is that without this information, it's pretty hard to have those conversations and actually talk to engineering and say, look, as we just showed live, we were planning to do a migration of a particular service. Then in theory, the engineering team has said, we're going to do it in July and it should save $3,000. So when it gets around to July, and we can see the forecast and we can see, did that actually happen? Did they actually do what they say we were going to do? And did we save $3,000? And we have all the information here to understand what the impact is and have a much, much more productive conversation with engineering. And actually, they love it too. Because what they really hate is you turning up at the end of the month every month and going, oh, we've got this big bill. We have no idea why. Please down tools on what you're doing so you can help explain this to me again about what's going on and what's happening. This makes this a much, much more productive, frictionless relationship between finance and engineering.
Yeah. You've shown within the app the split between what's going against gross margin, cost of goods sold, and what's going into the development area. Supposing you've got maybe three different apps that you're working with. Can you get that by product split as well?
Absolutely, absolutely. So what you're seeing here, so you've got production costs, which is in your COGS, and non-production costs, which will go into OPEX. But underneath these are what are called cost layers. And so you can create any, essentially like a chart of accounts, any structure you want. So obviously you've got multiple products, you might have different regions that are operating in, on the different growth assumptions, so on. So very simple, we can automatically map to that. And then, if you want to say, okay, product A is going to grow according to this metric, and product B we think is going to grow according to this metric, you just plug those metrics in, and our system will do all the work to figure out what is the marginal cost, what happens as product A adds another unit or another dollar of revenue, what's actually going to happen to your cloud spend there. And obviously different growth rates will have very different impacts on how the bill's going to grow. So you want, particularly if you've got a multi-product business, you really want to make sure that you're modeling the growth and the costs very differently between those different product lines. And they'll probably scale very differently as well.
Yeah. And I think that a lot of the audience might just be seeing this for the first time and thinking, this isn't a problem that we've got at the moment, but hey, just keep an eye on things. And 12 months ago, I'd have said, well, this isn't a problem that relates to Grow CFO. But suddenly we've said, hang on a minute, we want to develop some training stuff using AI. And rather than go buy a package off the shelf, we're playing about with development tools, which are consuming AI tokens.
Absolutely.
And at the moment, we've got very little visibility of what that's really costing. Although we can see the tokens we've bought going down.
And I
But
think
I
a number of
can now
people
understand that you start ramping this up a little bit,
Yeah.
that having the information is going to be a really, really significant thing for the future.
Absolutely, and I think there are people here who are saying it's already 15% or more of their P&L. If that shifts around, that grows, 20%, 30% month on month because of AI costs, because of growth. That's a very volatile line item, and probably very likely the one that's least well understood. So, as a finance leader, getting control of that, getting visibility, knowing how that's going to scale is going to be really critical before it gets out of control.
Yeah. So I'm expecting Shervin to pop up any minute because we're on time.
Stop sharing.
And here he is. So Ed, thank you very, very
Thank
much.
you very much.
Sorry to cut you short there, but we need to keep on time. See you again in 20 minutes for the round table.
There we go. All right. Let's see what we
Shervin,
got.
take it away.
Take it away. Let's see. I'm just sharing my screen. Let's see if we can get this going.
Got you. It's there.
Do you see my screen right now?
Yep, got it.
Do you see a picture of my face or?
Yes, I can see your face.
Okay, good, because my screen seems to be bugging. Give me 1 second. Let me try it again. Let's see. All right, there we have it. Thank you so much, Kevin.
There we are.
Appreciate it. All right, let's jump right into it. Or actually, my screen just stopped working again. Perfect. What a time to be alive.
Oh, technology, eh?
Yeah.
One of these days we'll get the hang of it.
Just give me 1 second, guys. All right. Third time the charm, I guess. Let's see.
We're back. Got you.
There we go. There we go. All right. So who am I? My name is Shervin. And you know what? Until today, I was no one. But from now on, I'm the discount guy. Now, why am I the discount guy? Well, let's uh, you know what? Let's go back in time a bit. So prior to joining Spembase, I was working for a company called Intrum, one of the largest credit management companies in the world. And what was my job over there? Well, I had several, but one of my last positions at Intrum was basically making sure that our clients were as streamlined as possible, but also as lean as possible. We're talking discounts, we're talking, low spending. And that's the theme of today. The theme of today is spend management, right? It's keeping the costs low. Obviously, the last couple of years have been hellish for all companies. We got inflation going on, we got wars all across the place, and then obviously, let's not forget COVID. Crazy times, and obviously, a lot of companies have shifted and pivoted towards a more cost-efficient focus nowadays. And in my prediction, that's just gonna continue, because if you're not lean today, well, you're probably in a bad space. Now, how does this relate to Spembase and what I'm going to tell you guys? Well, here at Spembase, we got three major services. Now, we do have a lot more than those, not gonna lie. However, I won't be bothering you guys with all the services. Let's keep it efficient. So, first up, the first service is basically partnerships that we got right now here at Spembase. Now, when I say partnerships, do I really mean? Well, here at Spembase, we got thousands and thousands of partnerships with all kinds of software companies. Now, a lot like Cloud Capital, we do have a service where we optimize and give our discounts for cloud services. However, we also work at a lot broader spectrum. So what we do is basically, since we have these partnerships with all these software companies, we're also allowed to generate partner discounts. So what we do is basically we say, hey guys, we knock on your company's door and look at what you have right now when it comes to software. You might have AI services, you might have cloud services, you might have SaaS services, right? And what we do is basically we apply as much discount as we possibly can on what you got right now without giving you anything new, really. And if we succeed, well, great. Then we take a commission. However, if we don't, we do not cost anything at all. So that's the first service that we offer. Now, remind you again, we have three services. So keep that in mind. Let's move on to the second one. And the second one is one that I think kind of goes by a lot of my clients, at least, kind of under the radar, right? And that's something we call Ghost Stack. A Ghost Stack is services that you're paying for, but you're not really maybe aware of or not really using. And this is a major, major problem, especially today when we're really pivoting towards a more software-oriented landscape. And this is where we can chime in and do our work. So again, we have the discounts which we grant our customers towards their services, but also again, second service is making sure that we are covering all the discounts and services and making sure that we are actually using them. So with that being said, let's shift towards something else. Let's see, Kevin, do you see my screen with a web service right now, or is it still the PowerPoint?
No, this is there's a screen looking into an app that says "Welcome, Shervin."
There we go. Perfect. All right. So this is our app, Spendbase app, right? Here, first of all, this is not a mandatory app to use if you're a client of ours. However, almost all my customers are super thankful for it. Now, why? Why are they thankful? Well, When they go into a partnership with us and we reduce their spend and whatever the case may be, they get access to this platform. And this platform, well, in here, you can basically view all your services today, everything from a like application level where you see what you're spending, let's say Anthropic in this case. We can see here at Anthropic, we got obviously a license that's current. We can see what we're spending today. And we can also see how many seats we got paid and how many is assigned. Other than that, we got some more info like renewal date, but also what's really appreciated from a lot of like the mid-sized companies and enterprise-sized companies is this view. In this view, you can see all my colleagues who are using Anthropic right now and when they last used it. In this case, it seems like we're paying for something that we're not using because no one has been really touching anything from Anthropic in almost a year. So we should probably, well, uh, stop paying them. It's that simple. But also on an employee level view, we can see here as well. So let's see Andrew. We can see that Andrew is, well, still with us. He's still working with us. And thank Lord for that because he's a great colleague. But what's really interesting is in this view. So Andrew has access to a lot of different services. One of them is Gmail, which he last used 4 hours ago. However, when it comes to Panadoc, he hasn't been using it for a while. Maybe we should, write his license off and not be paying for it. So the spend-based platform is a lot about visibility and transparency, right? Making sure that you know what you're paying for, but also that you're paying for the right stuff and not the wrong amount. In this platform, you got a lot of different things. For one, you got the password manager as well, which is free of charge, which is, I'm sure that most of you guys are familiar with what a password manager is. But for those who don't, here's a brief explanation. A password manager is a storage almost where all your passwords are stored, which you can access with like a master key. So basically, practically, it's you becoming independent and just using one password instead of hundreds of different variations. This way, it's easy for you to remember because you only need to remember one password really, but also you're making sure that you're safe because then the other passwords can be a lot more complex. And then let me actually rewind a bit. Remember when I said that we can see and track what kind of apps you're using? The most common question I get here is how? How do we know which apps you're using? First of all, that data won't ever be shared to us here at Spambase. It's just local for you guys. But second of all, to answer the question is one of two ways. The first way is if you're using Google Chrome, you got the Spambase add-on / plugin right here. This plugin tracks when you log into different kind of apps and websites. Thus, you can see what you're using and when you use the last. However, if you're not using Google Chrome, which might be the case for a lot of people, you have something called SSO integration. So if you're using an SSO currently, we'll probably just be able to plug and play to that app and then get the information and data from them, making sure that we always know, and when I say we, obviously I mean you guys when you're using the platform, then you know what apps you're using and what not. So that's basically all for the spam-based app. I'm not going to go too much into the last pointers here, which is procurement and money. But procurement is part of the platform we can easily or really complex, depending on how you want it, set up procurement routes. So meaning if you want access to a new maybe application or just maybe more money on your card, well, here you can easily ask for just that. You can get different kind of categories, which are customized toward your company. And again, you can make it as simple as possible or as complex as you need. Now, last but not least, on the platform. The money section, I won't go too much into it, But Spambase is basically a bank as well. What does that mean for you guys? Well, first of all, you can make like regular transactions as usual. The second of all, you can also get virtual cards. Now, these virtual cards could be assigned towards a employee on an individual level or a project level or team level. What's nice about these cards is that you get cash back. So, with that being said, that was service number 2. Let's get back to the PowerPoint. So we kind of went, through what value would deliver through these 2 services. First up was that we go in, give you as much discounts as possible. And the second one was basically giving transparency on what you're using today. So you're making sure that you're not overpaying on anything. Now, towards the third service. And the third service is really, really my baby. And why is it my baby? Well, it's my baby because it's 2026. And 2026 is the year of, well, not only AI, but especially agentic AI. And this year AI is no longer like a buzzword anymore. It's actually essential for a lot of businesses, and that's just going to keep on growing. So, what is the third service? The third service is basically a subsidiary of Spambase, which is called LLM API. Now, what is LLM API? Let me show you guys. LLM API is, well, it's a lot of things, but it's a platform where you basically have every LLM API there is under one roof. Now, what are the pros of this? They're several. First of all, you get one consolidated discounted AI bill. So all your AI spend on one bill, and we pass through volume discounts, you can't get a loan. So that means we can give you discounts on Claude, OpenAI, Gemini, doesn't matter. Just like our first service, which was discounts on, well, services and SaaS and cloud in general. The reason why we can give those is because we have negotiated enterprise deals. And the same thing applies here. So we have enterprise deals already negotiated with all the LLM models that are out there, which are, 200 plus, in our platform, meaning you're liable to become a customer with us and get a hold of these discounts right away. So that's the first pro of this. The second pro is obviously a lot of you guys are CFOs, or at least in the finance department, and you want to make sure that you're transparent with your costs and making sure that nothing is going off the boards. So what you can do here on the platform is basically put hard budget caps, so nothing goes away crazy, or sometimes when something breaks when it comes to AI, that means that the tokens are just being obliterated. They're just being spent on errors or bugs. In this case, you can put caps, so what the max token amount is that you can spend on something. But also, again, you get the real-time visibility. And the third pro of this is not only do you have like every LLM in one platform, but say that one of them goes down and your business is super dependent on that platform. Well, we have something called fallback, which is basically, well, like the name indicates, a fallback to a different LLM model as soon as something crashes, making sure that your business is always on par, right? Now, to the last pro, which is basically try before you commit. And what's nice about LLM API is you can try the same prompt across every model side by side to see which one wins on quality, but also cost. Then ship it in just one click. So we'll let you see per model costs or performance in one analytic section, so you can pick the most cost-effective model for each task. So it's evidence and not guesswork, right? And on top of all this, instead of having different kind of API model, like keys towards different kind of platforms or services that you got going on, you got everything in one place, which means you only have one API key from here on out, which is basically access to every LLM there is out there. So that's basically the third service. I know there was a lot to cover, but let's just kind of recap what we went through. So first service was the discounts, right? We got partnerships all over the place. We grant you these discounts as much as possible. And if we don't have a partnership in place, we got professional negotiators, a team of 15, 20 people who are negotiating every day. And these people will help you out on those vendors that we don't have partnerships with today. So bringing your costs as low as possible, and that's it. Pretty simple, right? That was the first service. Second service was the platform, gain visibility, have a password manager, have like the cashback cards all in one place, making sure that you're not overspending on anything. Super easy, super simple. Third service was the LLM API platform. Having all LLM API keys in one place, getting discounts on them, and making sure that you have a transparent view of what you're paying up for right now. Super simple, but also cost effective. Now,
Kevin, thank
yes, sir.
you.
Thank you. Thank you.
That's fantastic. And there's one thing I had a different hat on as I was watching that and thinking about we at Grow CFO went through ISO 27001 not very long ago. And one of the things we tried to get our head around was how do we keep under control what various members of the team have got access to, and how do we control joiners and leavers? Now, that to me seems as though it could be another use of the product that you didn't mention.
Right. You're absolutely right.
Yeah. Yeah. So
I forgot to cover that part.
yeah. So at this point, I'm going to ask back our other vendors. So I'm hoping folk are still there. And the question that I'm going to pose to each of you in turn is quite a simple one. Now, we've had a look today across the spectrum of cost management at what's going on. And we know that life has moved on in the last 18 months since we last looked at this area. What are we likely to see in the next 18 months? Johanna, you're first to present. Would you like to take that question first? What do you think if we're moving the clock forward 18 months, we'd be talking about?
Yeah, absolutely. So by the end of next year, finance teams within expense management won't be asking, how do we process this expense? They'll be asking, why are we spending this money in the first place? Because the processing will largely take care of itself. Through AI, automation, embedded payments, this will remove much of the manual administration that finance teams deal with today, allowing them to focus on insight, governance, strategic decision making. And we'll also see a shift away from standalone tools towards more intelligent spend management platforms that bring expenses, cards, payments, and controls all together in one ecosystem. So at Expense In, we're already seeing that shift happen. And later this year, we'll be introducing embedded payments, which means organizations will be able to reimburse employees directly from Expense In. This will then remove another manual step. It will speed up the processes for the employees, and it gives finance teams even more control and visibility, all within the one system. And alongside that, we are continuing to invest in AI. Things like receipt data capture have already come a long way, and we'll soon be introducing features like alcohol detection on receipts. But that's really the starting point. With how quickly AI is evolving over the next couple of years, we'll see more intelligent automation built into the platform. So for us, it's about closing that loop on company spend. Over the last 11 years, we've built one of the most trusted expense management platforms in the market. And now we're evolving that into something that doesn't just capture spend, but also controls it, pays it, and helps organizations make better decisions from start to finish.
I think the interesting one there's the analysis part. because as you get more and more data
Yeah,
and
absolutely.
more reliable and accurate data, the sort of trends that AI can begin to spot across that could be really interesting. So
Yeah,
exciting times.
always.
Celine, what do you think's happening in the next 18 months?
Well, that's a great question. Thank you for asking it. So, in the next 12 to 18 months, we'll see a real shift from automation to financial control. AI will move from processing invoices to predicting spend and highlighting risk in real time. AP will become increasingly touchless and scalable even as volume grows. And in the UK, the recent e-invoicing announcement is a big accelerator. The government has confirmed mandatory structured e-invoicing by 2029, likely aligned with people standards. So, what's happening now? Companies are already starting to prepare, moving away from PDF, connecting to networks like People, and modernizing their AP processes. So, the good news is that solutions like Hughes, we are already People ready and built to support that transition. So, it's not a future challenge, it's something you can start acting on today. AP is evolving from cost reduction to real time cost control, driven by both AI and regulation. That's what
Brilliant.
I think.
Yeah. And do you think the adoption of Pebble will come along a lot earlier than that government deadline, or will it be something that people are being pushed into at the last minute?
It really depends on countries. We've seen so many regulations and application of the regulation. We've seen Belgium, we've seen France. France, for example, it's going to be mandatory in September. Belgium, it was mid of year last year. So I don't know how the UK government is going to manage this, but hopefully, if they want to let this people format accessible to all companies so that they're ready before the date, it would be great.
Mm, mm. Ed, what's your view on that question?
Well, 12 to 18 months, I don't want to be too doom and gloom, but I think we've already seen a trend. So when we started working with CFOs maybe 12 months ago, compute spend and AI spend was maybe 5-6% of revenue. We already saw today some of the people on this session were seeing their compute spend at 15% or more of their revenue. We're unfortunately seeing customers way above that at 30-40% of revenue. And actually, in one example, now seeing companies spending more on compute and AI than they are on payroll. And we are really starting to see that shift between humans as the driving force behind companies into AI and compute as the driving force. And so I think it's something that obviously really deserves and warrants attention. It's something where finance leaders need to lean in now and work closely with their engineering counterparts to understand what's going to happen and how these costs can be kept under control. Despite all of the fantastic value that you can drive from using AI and compute to deliver much better products, it's now something where if you don't take control, if you don't have that kind of predictability, you're going to end up with a business that actually is a very different shape than you want. It's been maybe 15-20 years where there's a pretty good playbook for how to build and scale a software company, but it was all built on the foundation that you would be able to have a nice kind of 80% plus gross margin, and you were creating these nice kind of profitable annuity streams from every customer. If your gross margin is going to be dropping that much that quickly, you're going to have to go back to the drawing board on your entire business model, not just on controlling that cost line item. So I think there's a lot of excitement around AI. It comes with a cost, and that's going to be growing very, very rapidly over the next 12, 18 months. So it's time to figure that out, time to get a bit of a better understanding, some good alignment with your CTO or VP of engineering, and start to think about how you can get those costs under control today before they balloon beyond your control. Sorry to be a downer.
No, I just wonder if, given these costs are going to go up in such a way, we're going to start seeing the reduction in humans involved in organizations. And up
We're
to
seeing it
now,
already,
there's been a
unfortunately.
lot of doom and gloom that it's going to happen, but I've seen most of it's been releasing people to do more quality work. But sounds as though we might just be at the edge of the cliff now.
I think there's a very material shift in that ratio happening. And there's some companies who have started more recently who have just started from a completely different foundation of how much they're going to have, how much headcount they're going to have relative to the size of their business. But we're seeing it with a lot of companies who are shifting pretty rapidly into to kind of AI first, where certainly headcount growth plans have all been rewritten in the last few months. And any incremental headcount has to be very, very heavily justified if you can't deliver the kind of returns and value with AI. And so that's just going to drive the shift. Even if it's not sort of big rounds of layoffs, you're just going to see that shift towards using compute, using AI to drive value. Unfortunately, AI doesn't work like payroll. It's pretty hard to accidentally hire someone or accidentally find their salary has doubled overnight. Unfortunately, with AI, you can do exactly that. And that's what makes it so much more challenging.
Indeed. Shervin, what's your view on this?
Kevin, for me, it's super, super apparent. Talking to experts in this industry and people who are really, really in tune with what's happening right now, everyone is talking about the same thing, and it's the rising cost of AI. A lot of people say that we are currently in a golden age of AI, not because it's super optimized necessarily, or because the results are that good necessarily, but because the relationship between the results and the costs. So the costs right now are super low compared to what they're going to be. Right now, companies are just basically giving out AI services at a discount just to get consumers in their ecosystem, making them comfortable, making them feel like this is the right one. And then obviously someone has to pay for all the data warehouses across the globe. Like everyone is building them. We got the AWS, we got Anthropic, we got NVIDIA. Everyone is building data centers and they're not cheap. And guess who's going to pay for them? It's going to be the end consumer. So basically the cost of AI is going to just rise up. The honeymoon will soon be over. So my tip is just basically get a hold of the cost management on that front.
So my cheeky comment at the beginning that says this is like a packet of 20 cigarettes and now you've had the free one, you're addicted to it is very true.
Very true. Very true.
Yeah. Guys, that has been a fantastic insight into the technology across the whole area of spend management. And we've looked at those traditional things of expense management and P2P, which are changing very, very rapidly. And we've seen this whole new area of trying to manage cloud cost and AI cost. And once AI cost becomes bigger than payroll cost, it is a very, very big item on your P&L account. So we've got to be aware of that. So, folks, thank you all for being part of this afternoon. Thank you for those that are still left in the audience after 5 p.m. here UK time. Hope you've enjoyed this, and we'll see you all soon. Thank you.
Thank you very much.